Welcome to Fear and Greed, the week ahead. I'm Adam Lang, and every Monday we're joined by economist Stephen Koukoulas. You'll find him at thekouk.com, that's THEKOUK.com, and on Twitter using the handle thekouk. Stephen, good morning to you.
And a good morning to you, Adam.
Thank you kindly. Now, last week, towards the end of the week, US inflation numbers came out and we saw a big market reaction. How did you see it?
Yes, it was actually quite stunning when you digest what happened on Friday morning, our time. The US inflation numbers came in a couple of tenths of a percent lower than expected, both in the headline figure and the core reading, importantly. And the market interpreted that to mean, well, gee, the Fed's getting closer to the end of the rate hiking cycle. The interest rate hikes that were priced into the market were scaled back by around about 25 basis points. The 10-year bond in the US rallied over 30 basis points. That's something you don't see in the US Treasury market. And quite amazingly, the NASDAQ rallied 7% on the day, the Dow up over 1,100 points. The market, if this is the change of trend in inflation, and we are getting close to the end of the US rate hiking cycle, then maybe we're going to be set for a decent sort of market recovery in 2023 after a pretty troubling year in both the bond and the stock market in 2022.
Yeah, it seemed like a little bit of good news went an awfully long way.
Yes, I think that's a fair interpretation.
All right, and we had some other data out last week too. So let's start with job ads.
Yeah, job ads, they are confirming that there's still a bit of pent-up demand for employment in the Australian economy. They've started to just sort of ease off a little bit. It depends which measure you're using. There's a couple of different surveys that come out, but basically what they're saying is that the good news in the labour market might just be starting to peter out. Now, that doesn't mean we're going to have a labour market crash and the unemployment's going to be spiking dramatically, but it just does mean that the evidence of the slowing in the economy that, of course, the RBA was trying to induce, and we're caught in the slowing in the global economy too, is starting to impact just at the margin on the jobs market as well.
So consumer sentiment, turning to that now, and that's been interesting to watch this as it moves. We had some measures on that as well.
Oh, we're gloomy. The two measures, one from the ANZ Bank and one from Westpac, they each produce one, and they're both equally gloomy on consumer sentiment. That if you sort of try to work back on why a consumer's feeling so gloomy, and it must be said that the levels of consumer sentiment are usually associated with either the global financial crisis or the COVID pandemic, or dare I say it, even the early 90s recession. It's the cost of living issues, I think, that are coming through. That we know that inflation here is elevated, way above our rate of wage increases, and if it's not petrol, or earlier it was lettuces, or energy prices is the hot topic now. We know that our electricity bills are going to be jumping sharply over the next year or 18 months unless the government does something about it. So consumers are seeing that and thinking, oh, gee, isn't that bad news? Plus the fact that they're now paying a whole lot more for their mortgages. Unlike the US, around about 85, 90% of mortgages in Australia are variable. So when the RBA hikes, people with those types of mortgages, pay it relatively quickly. And I think that's feeding into gloomy consumers. And normally, with a slight lag, consumer sentiment does feed into consumer spending. So it's a sign that, maybe the Christmas period for consumers and retailers will be a little bit soggy.
So let's look at another measure, and this one's different, NAB business confidence.
Yeah, the business sector, even though the business confidence and business conditions, two slightly separate measures within that survey, both edged down a bit. The business sector is actually doing pretty well in contrast to what we were just saying about the consumer. So the business sector is probably looking at its opportunities to expand, perhaps projects that they shelved during the lockdowns over the last 2 years. Their wish to build new warehouses or hotel blocks and these sorts of things have now come onto the planning and into reality. And a lot of machinery and equipment investment intentions are very positive too. So you look at trading, profitability, they're all at a pretty decent level. So while we consumers are gloomy, the business sector is getting on with business, and they're investing. They've got decent profitability. They're still hiring, as we were touching on the job ads series before, but maybe not at a breakneck pace. But the business sector is doing okay.
Now, there was also a speech from RBA Deputy Michelle Bullock on the economic outlook.
Yeah, she's, in a sense, just really captured what the RBA has been publishing in their regular quarterly updates of the economy. But she did touch on a couple of interesting issues in the Q&A session. They've moved from we need to hike interest rates because they're too ridiculously low, to now thinking, well, we've got rates at a sort of a neutral level, and we're going to be watching the economic data come in before we commit ourselves to, future aggressive rate hikes. So, clearly if the inflation, the jobs numbers, and the international side of the economy are still really strong, there's more rate hikes to come. But, as we're just discussing on last week's number on the US inflation rate, if we start to see that inflation deceleration here in Australia, we are getting really close to the end of the rate hiking cycle in Australia, and that's got to be good news for the housing market for one, but also just for the business sector as they're looking to ramp up their borrowing and their spending.
Now let's turn to the week ahead. It's a big week for the labour data.
Oh, huge week. Two really critical releases, and that'll feed into the RBA thinking, just by the way. The first one's the wage price index. So wages, the hot topic of, the last year or two in particular, not just politically, but also economically. We're likely to see a pickup in wages. The year-on-year figures are likely to go above 3% for the first time in close to a decade. So this tight labour market that we've been seeing through the last 6 months with unemployment at a 48-year low is probably going to show up in wages picking up a bit, not too hot at this stage, but we'll be watching for that wage increase. If there's any downside to the outcome, then of course that puts further, dampening pressure on what the RBA might be doing. But we also get the next day, on Thursday this week, the labour force numbers, and that's the job creation, the unemployment rate are all included in that release. We've had a softening of employment growth. Again, the slowing of the economy has seen, just in the last 3 months or so, the rate of job creation scaling back a bit. The unemployment rate has stopped falling, and going back to that job ads number that we saw last week, it's just suggesting to me that, not that things are bad in the labour market, but we've just got the evidence of a slower economy. The unemployment rate may tick up a tenth from 3.5 to 3.6, so nothing terrible. And the market's looking for a relatively modest increase of around about 15,000 in jobs in the month as well.
And one more for the students amongst us, Stephen, the RBA minutes for the November meeting and that 25-point rate hike.
Yeah, that's an interesting one because, again, as we're just discussing with Michelle Bullock's speech last week too, the minutes will put some details around the decision to go 25 points earlier in this month. So they'll sort of articulate, the world economy being concerned. Yep, they're still worried about high inflation. They'll probably talk about house prices falling as a negative wealth effect. All the things that we've been talking about, in a sense, will feed into the minutes, but it gives the RBA's take on things. So we'll just get a bit more of an idea and just how confident they are that they've got enough monetary policy tightening in the system to see inflation fall back through the course of 2023.
Yeah, the context of their decision-making is always interest to me. Stephen, have a great week.
Thanks, Adam. You too.
That was economist Stephen Koukoulas, better known as The Kouk. You can find him at thekouk.com and follow him on Twitter using the handle The Kouk. I'm Adam Lang, and this is Fear and Greed, the week ahead.